Hi there, traders. It was a rather slow week for the majors. We had a little bit of chop action in the Great Britain USD, the Euro, Aussie, New Zealand, and mostly even the yen kind of drifted sideways. I guess the yen had a bit of movement. I made quite a few pips though, scalping in and out some of the more exotic pairs, such as the Great Britain AUD, Great Britain New Zealand, and the Euro JPY, up over 400 pips for the week. So I'm very happy with that. But in the more long-term trades, which I like to call my stacker trades, we're in trades, but not really much going on. So let's take a look at what we have right now. And we'll start off with the Great Britain USD. And if you guys are rushing to copy these charts down, they're all available on the blog. You can see them. You can see them for free, and I mean we even have the trading plan and so forth. So no worries. You can see that this pair has, since for about 2 months now, just been drifting in a sideways range between 158.75 and let's say 163, 162. I like to do 163.33 just because that is the high from the beginning of the year, and the pair has basically just been consolidating at this range, looking for a break. One way or the other. I am very sidelined in this cross right now, and in all honesty, I'm going to be sidelined until I get a break of either the 163.30 area, and I'm in a solid one-day close above that level, or if we get a breakdown down below this 158.75, close this gap finally down here, and look for a continued push lower towards the, well, I mean, initially your target would be the 154.30 range, but right now, I mean, there's nothing you can do. You can go on a more four-hour chart, and you can probably try to just scalp the top and the bottom of the range. I mean, that would be the plan at this moment. But if you're trying to get into a trend, there just isn't a trend at the moment. Now, the Euro USD, now this is an aggravating pair right now at the current moment. You can see that the pair broke below this key resistance we had here, actually about 134.90, and it broke below with authority, and it shot all the way down to the 50 fib from this move higher. And this all happened not this Thursday, but the prior Thursday, when we had the surprise interest rate cut by Draghi. And you can see from that point, the pair made a candle that went from the 135.27 all the way down towards the 132.92 50 fib level, and it reversed there on the dime. And from that point, we've had 6 days inside that range. It has been a general gradual climb higher, I'll give you that, but we haven't broken this area right here, which would be the range of this, the high from this candle right here from the drop lower. That would really indicate that we have a momentum change, and we could see a pushback down lower. Until that point, though, my bias is still for a further push down, but I'm not going to jump into this right now. I'll have to wait and see. And if we look at this entire move lower, cyclically, it's actually a little bit long in the tooth. We're approaching the 20th day, and most of these moves have a pullback of some sort right around that 20 day, basically 3-week mark. So we'll have to keep our eyes on this and see if we get a pushback higher above this range. If not, it does favor a push down lower, and the risk reward is definitely in the cards right now for that. I mean, you're only risking 30 pips, but all in all, there's a great chance that trade could end up getting triggered. I mean, that could close. We could see a break of that 135 level in the short term. So that's going to be a key, the high there, or a break back down lower. Same in the Swiss franc. I mean, it's basically just the inverse relationship of the same pair, but you can see we had a break of the ascending trend line, and the pair shot up, and I mean, I guess it did reverse at that 0.382 fib, but I'm not too concerned about that. What I am watching is that you can see that the pair is sitting right here on this trend line. It's the same thing. We're looking to see if we get a hold of this level, which is down to 91.06. If we get a hold of that, it favors continued push higher. If we break that and this trend line, then we could see a push right back down to the 88 level. What else we want to look at? The Aussie. The Aussie, on the other hand, has just been consolidating this week. I mean, it's almost rather amazing. It's sitting right at this 92.90 level. We get a break of that, then we're out of the fib range and we're out of the support range here. That basically, if we superimpose this over the over the Great Britain, just look at this, put that over the Great Britain, and we're basically seeing the same thing. We're in a range here, just bouncing around, but it does have the potential to break down lower, and then we would see some momentum. So we're going to watch the 92.90. We want a daily close of that. and a daily close below that, and that would favor a continued push lower. But once again, if we do get a break higher, I'm going to have to wait all the way up into this 95.09 level before I'd really be convinced that I'd want to jump into the atmosphere pushed higher. And what has everybody been talking about but the head and shoulders in New Zealand this week? There it is, right there on the daily chart, and we did not break through it. And I know if we put a 4-hour chart, put a 4-hour chart, and we put an ascending trend line right here, bam, you can see that we definitely broke out of the descending trend. So what do we have now? We basically have a pair just drifting about. I don't see any advantage of any edge I have trading this cross at this exact moment. I mean, until we get a hold, I guess, of this 82 level, it does favor a continued push lower, higher, and you'd want to see a push above this 84.05 level, and then maybe we favor a push up to the 85.70. But I mean, all in all, we haven't broken the high from yesterday, so all in all, we're having an inside day here, and that's really not giving me any direction either way. So I mean, I guess I can say above 82, looking for a push higher, but we need to break through that 84 and then follow it up to 85.70. Yen pair, I mean, to be all honest, this pair just bores me lately. We did have a pretty active week. We moved from 98 up to 100. Actually, no, this is our week. We moved from 99 up to 100, so not that active of a week. We're getting capped at 100, and what we really have to watch is not that 100 level, and it's a good psychological level, but we have this 160 level right here. We get a break of that, then we could cycle up to 101.50. But I mean, all honestly, this pair, look, the ranges, we're getting narrower every time. It looks like we're drifting back into this kind of trading that we had for the last couple of years, and except for the fireworks that we've had recently, this pair was relatively boring cross. You know, you get like 30, 40, 50 pip ranges, ATRs in a day. So I mean, I know when the government might be done with the grand announcements and they're in the implementation mode. So we'll have to keep our eyes on this, and it could just be rather dull trading for the short term. But now, if you want to look on the inverse of that, look at the Euro JPY, and you can see that this pair. Now we have something interesting here. We see the range, obviously, same thing, 2 months, 131, 135. We're getting right to the top of that 135.50 range. Now, I'm not saying it could reverse right here, but I'd be looking for I'd look for a spike up above this, and then maybe a daily close below that low from the spike up, and I would be all in for another push back down lower. And I'm not sure we'd get a push all the way to the 131, but if I could get in and get it for a push down to the 132.50 level, that would be a nice, a nice 200-300 pip move that I'll be looking for a setup in the short term. And the Great Britain JPY above the 160 level, so we have broken out of the congestion range also there, and I guess 162.90 is the target there. That's it. That's a wrap. If you guys want to sign up this weekend. You're in on Monday, and you get access to the Keen feed where I go through all my trades. I said I was up over 400 pips last week alone. Everything's going. Everything is mostly those are on daily trades where I'm just going in and out. Some of the pairs looking for short term but rather substantial profits. And I haven't been able to do what I call the stackers, which are longer term swing trades where we keep stacking into the trades and limiting our risk on each entry, just because the markets haven't been going anywhere. And but volatility will pick up. I don't even need large ranges for the day. I just look for a trends, basically. Trends will occur eventually. Even in slow markets, things tend to trend one direction or the other. And that is it. Sign up today, and you'll be in. Check the blog out. All these charts are up. And other than that, you guys have a great weekend. See you on Monday.